everybody. Welcome to TraderMerlin Show for your Monday edition. Sorry about Friday. I missed you on Friday, although I had a great time speaking over at UCI with Larry Jacobson. He had some great students and just had a broad discussion on digital assets, leadership, and it was fun. Good time. But I missed you guys. We'll make it up for it this week. Just so you know the guest schedule for this week, I do have 3 guests this week, which should be a nice break from the norm, so I don't have to torture you with me just talking out loud. We're going to have tomorrow Justin Krebs on the program talking about end of year kind of retirement planning, almost tax planning, just what you'll be thinking about going into the end of the year as we have just a few weeks left. Then on Wednesday, we're going to have Ryan Watkins on the program. That's right. We're going to do the follow-up to the trade plan piece. Remember, about a month ago, we did a session on what's really needed to build out a trading plan and kind of what the steps are. And Ryan said, hey, I will do 2 free trade plan analysis. And he usually charges for those. So we picked 2 names at random. I sent those over to Ryan, and we are going to do the final review, kind of showing you what the plans are. And then here's the revisions or modifications that we would suggest. Of course, you can do whatever you like, but just our 2 cents and experience piled onto those trading plans and hopefully help out those 2 viewers. So that'll be on Wednesday. And then on Thursday, David Warner's going to be back on the program talking about Forex and currency markets. So it should be a fun week out there. Today's show was driven by listener questions, so for those of you who may be new, and I know I probably have a few new people joining us on a regular basis, which is great. If you are new, click that subscribe button so you can be part of the live show and know when I go live, which is pretty much every day, Monday through Friday at 2 p.m. Pacific time, and maybe be some new videos coming out here in the future. Yes, Thomasina, thank you so much. I saw you little saying you did a little write-up on your social media channels about this show. Thank you very much. I do appreciate any guerrilla marketing that people can do to help out. Always makes things better, because I think the more that we get this group, the more people will get in here, the bigger, more interactive the chat becomes. And I think that there's learning that I can convey, but also we've got a lot of people in this room that are very smart traders as well, which can create almost 2 separate learning environments, and we can use them to build an even better environment. So there we go. All right, today's show was driven by, as I mentioned, listener questions, and I haven't reached out to Dr. Woody Johnson to do a show specifically on psychology, but there are a couple questions came through, and it said, what was the biggest challenge for you as a trader? And I thought, you know what? Why don't I just help some of you out, because I know many of you are very experienced. Some of you are not. So let's just kind of do a show for anybody. And this may actually help out for you that have friends that are looking to get into trading, or people who are just downright struggling. So I'm going to start with this, and then we'll dive into the markets, which were great today. I'll give a big drum roll. I'm probably going to shock most of you. I closed out all my put positions today. Yes, as the market was tanking, pretty much the last hour of the day, closed out my S&P and my Qs. Now, there could still be the potential for downside movement here, but going into the end of the year, that last few weeks, there generally is that positive Santa Claus rally, which I hate to be so cliche, but I actually built some long positions in XLE, XLF, were my 2 big positions I built out today. So there you go. Just sprinkling that on, time permitting, I can take a look at some of those as well and see what in earth I did in my portfolio. So here's the question that's going to drive today's show. And of course, I would really love it if you guys interacted as well. If you have questions, problems, issues, things that are driving you nuts with your trading, just type it in the chat. You know, I'm happy to help out in any way that I can. I talked to a couple people that watched this show this weekend, and they're like, oh, your content's over my head, and I just don't want to feel stupid asking questions. Oh, shut up. Ask questions, even if they're stupid. The only thing I won't tolerate in here is hatred of other people in the room, being a total complete idiot, and spamming the chat with a bunch of garbage, which I will just block you right away. So don't worry about it. Ask a question. We got a friendly group here. So here is the question came through from Tim, and I'm going to read kind of all 3 of these just because I believe they kind of get grouped together. He says, could you please do a show on trading psychology? I feel like it's what I'm missing. I will reach out to Dr. Woody Johnson, who is a trained psychologist. I am not a psychologist. I am one that has learned through the University of Hard Knocks, which is the most expensive way to learn, as most of you probably understand. You know, when you learn this from scratch and you're trying to learn through trial and error, it can be a very, very expensive thing. And I've definitely paid my dues over the years. I have all kinds of things I've shown you that kind of help me get past some of those. But sure, I'll bring Dr. Woody Johnson on, but I think a lot of this I can tackle through my own personal experience. So the first one was, can you do a show on psychology? Yes. Number 2 from Tim was, what was the biggest challenge for you when you started trading? How did you overcome it? Okay, so I thought I would break this down into, and I real quickly did this today because I have more things on my plate than just doing this show every day. So I real quickly wrote down kind of 4 pieces that I think were critical at least in my discovery process, and probably going through some of yours. So as far as biggest challenges, look, trading as itself is massively challenging, and there's so many different challenges that people face. So I'll start with the first one, which is listening to others. And this is a huge problem. I mean, this is at the core of trading, in my opinion, because if you step back and think about who has taught you how to trade, who has taught you how to invest, subconsciously, it's Merrill Lynch, it's JP Morgan, it's Goldman Sachs, it's Wells Fargo. It's these gigantic financial institutions who have been telling you, you should save, you should put money in our institutions, you should be buying these stocks. And, well, by the way, since you don't want to do the research or can't do it because you're not as smart as us, we have research analysts here that do all the work for you, and they're going to break down and analyze these companies for you so that you don't have to do any work, because honestly, the average American is just too dumb to do it. No, I'm kidding. I'm playing kind of devil's advocate here. They want you to stay with them. They want you to invest, and these firms generally get paid by assets under management, AUM. So does that mean that all the information they're giving you is bad? No, not at all. Sometimes they might be giving you some good information, but the basic cornerstone when you listen to these firms or anybody talking is, remember, there is generally a vested interest on somebody who is giving you a recommendation to buy anything. Now, on this program, I'll tell you what I bought today. I don't have a vested interest if you decide to go long energy or financials. It really doesn't make a difference to me. I am long those, at least with the options market. So if you want to make that play, great, but you have to do your own due diligence. I could be completely wrong, and energy and financials could tank through March, which is when I have my options till. So first mistake I would say is people are listening to others. You know, you look at things like, or people like Jim Cramer. You know, I like Jim Cramer because I believe he does have a good degree of intelligence with regards to the markets, but a guy worked for Goldman Sachs, and he's on one of the major financial TV networks, which I was kicked off of for doing what? I was kicked off of CNBC because I said, well, the host, Amanda Drury, says, "Hello, Merlin," in her lovely Australian accent. Hello, Merlin. Could you tell me what your thoughts are on the S&P 500? I was like, oh, pitter patter. Just talk Australian accent all day. I'm good. And I said, okay, sure. Here's my thoughts on the S&P 500. I said, you know, we're forming a double top formation. We're coming down to this level. If we break 1260 on the S&P 500, break out the bulldozers, we're going down in a big way. And she laughs and she's like, okay, the bulldozers. Okay, all right, let's go to gold then and talk about gold. And in my mind, I'm thinking, you just had a guy on your program say that if we get below 1260, we're going to crash in a big way. And instantly, if one of my guests was ever on the program and said something like that, I'm going to go right at him and say, awesome. Okay, what is it about 1260 that makes you feel like that's the turning point for the markets to absolutely crash and break out the bulldozers? Because that's a pretty strong sign of conviction. She didn't do any of that. And in my earpiece, they told me on the commercial break that you're done, and I was booted from the program. Remember, who gets paid on CNBC? Well, all the hosts, all those actors or participants, you know, I could read all the David Faber and all those guys. I don't remember all the names because I don't watch it anymore. They also are paid for by advertisers. The last thing advertisers want is for people on that program to say, the sky is falling, get out, sell your stocks, and move on. They want, you should buy General Electric. Remember, it used to be owned by GE. CNBC used to be owned by GE. You should buy GE, the greatest company ever. That probably would have gotten me back on that program. So listening to others is a huge problem. Now, when you're new, you're just trying to find any direction you can. And there's a lot of false prophets on there. You guys know one in particular I like to throw under the bus on a regular basis, who I personally believe is an absolute false prophet. I believe that the regulators, the FTC, having subpoenaed his trading records, make it very clear that this guy loses money. I don't have to make any assessment here. I can just look at what the courts have said about this individual. Yet he still comes off and says, I'm a great trader coming to my school. Again, these are things you should be looking out for. So anytime somebody says it, even this program or your best friends, or I know some of you are in groups, other sessions, whenever someone says, hey, buy this or sell that, just do your own research, right? Take a step back and look at the charts. What are they really telling you? And don't let someone else's belief system pull you in. Now, I'll give you another personal story about this one, listening to others. I can't remember like 100% of the details, but I remember it was like, I want to say 2000 or 99. I was sitting at my computer on the trading floor, which we had about 180 people on the trading floor in Irvine, California. And on the TV in front of me, was CNBC, right? So I'm sitting back, I'm watching this, like, okay, what's going to go on here? And all of a sudden I see Steve Ballmer come on the program, right? And Steve Ballmer is out there just singing the praises of Microsoft. This is the greatest company ever. I've got to buy you should, load the boat on Microsoft. We are the best. We're going to dominate the world. And so I hear this, I'm like, shoot, he's laying it out there thick. Boom, I bought 1,000 shares at market. I'm listening to others. I'm listening to Steve Ballmer, who's the CEO of, or president or CEO of Microsoft at that point. Chief cheerleader is what he should have been called. So I bought 1,000 shares, and then instantly, the moment I bought my shares, it did nothing but go against me for about the next hour. And I lost thousands of dollars on that trade. Why? Because if you understood what was going on with that simple influencer, if you will, what basically happened here was CNBC on their website has a little calendar that showed you when the different guests were going to be speaking. I did not know this at the time. So what happens is if someone saw that Steve Ballmer was going to come on and talk about Microsoft, they would already be buying before he came out and said one word on the show. As soon as he comes out and starts speaking, of course, now the retail masses, the sheeple, that was me at that point, jump in with everything we got. We buy a bunch of Microsoft, and that's when you know it's going to turn and it comes the opposite way. So while he may have been right long term that that Microsoft was going to be a great company, my timing was off and I was influenced by somebody else, and I ignored the fact that this thing rallied a huge percentage going into his speaking time on CNBC. So that's one personal example. I'll get to all these questions, Gallo. I see some coming in about hammers. Awesome. And Joe? Let me get through this top piece first, and I'll dive into those for sure. So that was number one, was just listening to others. I think it's an easy one to fix. Just stop listening to people. I've often showed this to you guys, which is my 10 laws of trading, right? And this is the result of thousands of erroneous bad trades. Rule number 3 on here is because I was listening to others. It says, ignore the news and listen to every word of it. Oftentimes, the news is already reflected in the stock's price by the time it comes out. However, understanding what is happening in the market overall is of vital importance in planning your next attack. And to me, that's it. That really tells the whole story. I can listen to what other people say. Just don't let that make your trading decision without you doing your own due diligence first. All right, that's number 4. I had 5 things on here. So next one's risk management. This is probably the biggest piece for what will be the right source of information, Gary? That's a good question. I don't know if there necessarily is a right source. I don't have any one location I look to and say that's the answer. Well, actually, let me backtrack here. The location I would look to find the absolute source of news and information on a stock is this right here. Price chart. I'd be looking at the chart of the NASDAQ, chart of the S&P, chart of the Russell, chart of the different, in all the different components that I'm trading. So that to me is truth. This is truth. And yes, you can lie a little bit with price. They might be able to influence for a day or two, or they could issue false press releases. But for the most part, what's known or knowable is reflected in that stock's price. So I would say this is the most trusted source. On a different level, one of the first things I do, and Gary, this is maybe what you're looking for. One of the first things I do every day when I trade is I look at Yahoo Finance. And you're like, what? That's not like high-end news. No, it's not. But I need to know what people are being told by the media. And so you could pick any news outlet, pick Microsoft, MSN Money, or whatever you want to go to. I go to a retail news source, and Yahoo's been my favorite. I've used that since 1998, since Yahoo really got started. So from that perspective, I like to look at what the retail information is being pushed out there by the media. And then I'll look at the charts and see if it's in fact being reflected. I think personally one of the best sources of information is to go directly to the data centers. So for example, I show you every day on this program, typically, what economic and fundamental announcements are coming out, what earnings announcements are coming out. And again, earnings they could have the greatest earnings in a company's history and be down 50%. It makes no sense. So I don't trade earnings, but I do look at those numbers and see what does the trend look like for that company and how might it change. Maybe this is a time, like Meta was a good time on their previous earnings, a great buy point because they were already down like 40, 50%. So I like to look at retail news, but I will go out to other sites just to see what the headlines are saying. And that's pretty much it, Gary. I don't follow people in the industry. I don't have any podcasts I listen to. I don't follow anybody on YouTube. Twitter, only people I follow are in the crypto space. I don't follow anybody in financials. And I guess that it sounds kind of, I guess, cynical, but I just feel like most of the information I've gotten from other people in the industry is very self-serving, and it serves their purpose, which is not necessarily the same as mine. Anyway, there you go. I hope that helped, Gary. I know it probably wasn't the answer you're looking for, but that's the truth. The truth is, the vast majority of people out there, they're just trying to get you to follow them so they can peddle some service to you or promote something to you and get paid. You know, you look at a lot of, let's look at Jim Cramer's show as an example, right? Do you think that these advertisers would be paying to be on Jim Cramer's show if he didn't have a bunch of followers? So all he's trying to do is get followers. And I would make the argument that I'm trying to get followers as well. Obviously, I would like to monetize this. Doing a show 5 days a week for an hour for free, starts to add up. I've done well over 1,000, not 1,000. I think we're up to like 600 shows of just TraderMerlin, and I did over 10,000 shows for Power Trading Radio. I was paid to do Power Trading Radio, but these ones here are all free for now. We'll see. Yeah. Best of all, it's free, right, Gallo? So the second one here is risk management. This is, for me personally, one of the ones that was absolutely killing me at the beginning. When you start out as a trader, you have all these visions of grandeur. You know, you see the guys and they've got their Rolexes and their Ferraris and Lambos and their yachts. You know, a lot of these people are actually renting those items in their commercials. So when you look at these commercials for a lot of the top traders out there, these idiots that are riding their private jets, no, they just rented a jet to go somewhere and took a whole bunch of pictures, made photo shoots out of it, and now we believe that they're driving Lambos or Ferraris, or even the Bitcoin conference that was going on in Florida a couple years back. There was all this documentation how all the exotic car dealers had rented out all their equipment instead of just thanks, Big Eb, I appreciate that. I really do. They rented out all their cars, so people, it's a status thing. I'm one of those guys. I would prefer just to drive my Toyota truck around. I have no interest in all that status stuff. But people use that as a way to lure you into believing that they're so amazing, that they're the greatest traders ever. So, risk management. When you enter this business, you're thinking of how much money you can make. I was literally singing songs as I drove from Northern California in my truck. It was a Toyota back then as well, to my to my first class I took at Online Trading Academy back in June of 1998. And I remember I was looking through all these magazines. I'm like, I'm buying this yacht, I'm buying this car. It was all about how much I could buy, how much money I could make. Unfortunately, when your focus is on how much money you can make, you lose sight of how much money you can lose. And here in the States, when I step off a curb, we know which way the cars are coming, so we automatically look that way. So if I'm crossing the street, I'm going to take a look to the left, make sure there's no car coming, and I should be good. However, you go to the UK, if you look to the left as you step off a curb, you're probably going to die. So my philosophy was modified by my mentor. He says, you're only focusing on how much money you can make. He says, the real answer to this is to look at how much money you can lose. And I kind of laughed at him for a little bit. I'm like, look, I'm not here to lose money. He says, well, nobody is. But the ones who make it are the ones that don't lose a lot. Your elite traders, the ones that Richard Dennis, Bill Eckhart's, the guys that were just books written about them, they're the ones that did not have big losses. So as a beginner, you're focused on how much money you can make. And the weird part is, and some of you may resonate with this one, if you, I like the PXG, there was an ad before the show. I told you guys, just for this month, I'm going to do a test and see how much viewership increases. It's not about the money, but in order to get them to play TraderMerlin on other people's timelines, YouTube wants to make money off of that. So if I don't offer advertising, they won't play me. So I'm just curious to see if it actually picks up. Eric, I think you're referencing, are you referencing the news portion there? So, with risk management, let me go and beat this one up a little bit. So from the risk management perspective, my day used to start with how much money I could make. And again, my mentor was like, focus on how much money you can lose. I have since come up with my own personal mantra, and I would make a shirt out of this one. I think it's a great one. If you focus on how much money that you want to make in trading, you're going to lose it all. You'll probably lose all of it. If you focus on how much money you're going to lose in trading, then what happens is, by accident, you'll make money. If you just don't let things get away from you, all of a sudden you'll let winners run. And there's this weird conundrum. No problem, John. See you later. There's this weird conundrum that in my brain that's like, why does it always happen? let's say we put on a trade. Let's say I go long 100 shares of, let's pick something. Let's go Microsoft, right? So I'll just bring up the chart over here so you don't have to stare at my ugly mug any longer. So let's say we got Microsoft on here and I decide I want to go long at current price, which is roughly 250, right? And I go, okay, if it gets to this close of this gap and gets to 266, I will take my profit. That's my target. Well, what happens is it runs a little bit and starts to turn around, and all of a sudden people just jump real quick. So instead of getting out at 266, I may jump out at 253. I'm like, wait a minute, I cut my winner short. I did not let it run. The other part of it is if it starts to move against me, and let's say I did the right thing, I got my stop loss down here below the lows, right? That's this second dotted line. Let's call it my entry. What's this line say? These lines are all messed up because it's showing post market. But I've got a stop loss on there for, let's call it $3 stop loss. What happens is for most newbies, it hits their stop loss and then they move it, 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 and then they move it. Next thing you know, you were supposed to get stopped out at 290 or 249, and now it's down at 212, and then it goes to 200, and then it goes to 150, and you're like, are you kidding me? I'm riding this loser. And that will blow your account. All of a sudden, your account is gone. And you feel like an idiot. And I hate to say it, you are, because you should have used a stop loss. Jim Cramer, by the way, will tell you should never use stop losses, which tells you right away you should never listen to Jim Cramer. You should always use stop losses, whether you're trading short-term intraday or long-term. So risk management, absolutely key. And I've mentioned it many times that you should always have rules in place for yourself. So, for example, my rules for risk management were $500 per day maximum loss as a day trader. If I were to lose $500 and a penny, I stop, move on. I don't care. It's not that big a deal. And the reason that $500 was put in place is because I'd have days where I'd be down 500 and make one more trade. And next thing you know, you're down 1,000. Oh, I got to get that back. Now I'm down 2,000, then 5,000, then 10,000. Like, okay. Then I'm damaged goods. So risk management key. And that leads into number 3 here, which is trading plan. Again, Ryan Watkins will be on the program Wednesday to discuss trading plans. We already did a previous session with him, so for those of you who might be new, check out that trading plan session. So you have the framework for what we're going to talk about, and then we're actually going to review 2 trading plans that came in. There was a couple dozen of them that came through, so we picked 2 at random, and Ryan's doing the mock-up on those now, and we'll have that show for you on Wednesday. Trading plan for me is key. There's an old phrase that says, if you don't know where you're going, any path will take you there. And if you don't know where you're going, you'll just keep grabbing at straws and you'll make all kinds of mistakes and you will never get to the ultimate goal. And I guess I have to say this up front. For many of us, our goals of what we choose to do as a trader are going to be rather different. I know that most people just want to make money. I would say my object is not just to make money. Obviously, that's a long-term goal. I would say that if I have to put down my objective as a trader, my objective is to consistently make money. I don't want to have a day where I make $3,000 and then the next 5 days in a row I lose $1,000 each day. That's just stupid. I want to be consistently growing. And part of that trade plan for me ties through to the risk management side. So for example, I think I've told you, if I have 3 losing days in a row, I stop trading. Just stop. Take a break. Take 2 days off. Regroup, because your brain starts to beat you up. Your brain will force you to trade more aggressively and revenge trade. And next thing you know, that small little loss for 3 days turned into a 5-day monstrous loss. So, and again, these are all just personal examples of what I've gone through that maybe resonate with some of you and can help you get past your personal demons. So trading plan, as Ryan pointed out on our show a couple weeks ago or a month ago, your trading plan should be 2 parts. One should be the business plan. That's the one that you would show someone, say, here's how I'm going to build my trading business. And I know people hate that word to use it as a business, but honestly, this is a business. I mean, it's like golf. It's like golf's not a sport. Well, yeah, it is. It's you against everybody else. And trading is like golf, but with money. Trading is all about making money by yourself, and everybody is against you, unless they're in the same trade as you. So you should have the business plan side of things, which is why are you doing this? What's your approach? What's your main philosophy? What are your stop loss risk management rules? Then the other side would be your specific trade plan, meaning I'm going to buy this Microsoft. Here's my entry, stop loss, price target. Maybe I'm using some indicators. How am I using odds enhancers, right? Those things help on each specific trade you make. And then there's the business plan side. So there's that. And then the last one, actually, let me guess. Can you guys figure out what the most difficult thing is in trading? I'm curious. You guys type in. It'll boost the chat score here as I read through some of these questions. What do you guys think? What is the most difficult thing as a trader or as an investor? It doesn't matter. We don't need to be short term. But there's, in my opinion, there's one that is hands and feet above all of these right here. And it all deals with, as I'm stalling here, waiting for you guys to type in the chat. I know there's a delay. My biggest issue when I first started, I would say, was my arrogance. And, you know, you can ask anybody I've dated over the years, I'm still arrogant, but I've become much more humble in the fact that I know the market is bigger than me, it's more powerful than me, and at any moment, it can kick my ass. So my issue at the very beginning was I was stubborn. I was so stubborn. I believed that I was better than the most people. I believed I was better than the market. I believed I was better than my instructor because I've got a degree and he didn't. That. So let's see. What do you guys say? Controlling your fear and greed, emotion, following your rules, accepting losses, don't listen to everyone, over trading, controlling your emotions. And as you'll notice here, my number one is easily knowledge of self. And all of yours tie into this, right? When I say knowledge of self, it's you are the most difficult part in trading. For me and my styles and all the different markets I trade, I am the biggest obstacle to me in my trading because I will talk myself out of trades. I will talk myself into trades. As options merchant says, fear of missing out. That's a psychological thing, is it not? And to me, that's what this is all about. Yeah, Christian, you better figure out your stubbornness. I was very stubborn early on, and you have to get past that. You have to say, nope, these are the rules. I'm going to follow it. And we could lump almost all of the psychological stuff into knowledge of self. Fearful to make a trade, not willing to take stop losses, another piece that falls into that. Knowing what your ticking points are, right? There's certain things, I swear to God, the market has a way of just pushing your buttons of whatever your weakness is and exploiting that. And if you don't know that, then I think you're prone to massive losses out there. So for me, knowing yourself and understanding your own personal demons, there's actually a test you can take. I think it's called the Big 5 personality test. Let's see. I don't know if this is the one I've used in the past, but I've actually used one in the past that was free. Free open source. I will just copy this over for you guys if anyone's interested. You can take this Big 5 personality test, and it will tell you a little bit about who you are, how you function. One very interesting thing I learned years ago from a trading psychologist was this. And I've mentioned this one to you before, but I know I might have some new people here. She said, okay, everybody in this auditorium, and there's probably 100 people there. She says, I want everybody to think about their coffee table at home. This is a trading psychology session. Why are you talking about coffee table? She said, I want you to think of your coffee table at home. Is it messy or is it very organized? Of course, I was in my 20s at the time, so I got my bong and some beer bottle and ashtray. It was a mess. And I'm wondering, well, what relevance does this have? And so she continues talking. She says, those of you who have a messy coffee table, you are probably going to have a big problem in trading because you lack structure, you lack discipline, and you're unorganized. And you can tell that by your coffee table. So for those of you that might be a little bit ADD and have everything all organized, it's very clean, right? You take all the magazines are on the little magazine sort off to the side. The remotes have a little basket that they go into, and it's very spotless. You'll probably do better because you have rules you follow and you're paying attention to detail. And I thought, an odd example, but it actually kind of makes sense. So, of course, first thing I did is I went home and I cleaned out my coffee table. Now, of course, I don't even have a coffee table, so I just get rid of that thing. Actually, no, I recently got a coffee table, but it's very clean and organized, right? Very structured. So that just, I guess, runs through, what were the biggest challenges? I struggled immensely with listening to other people because at a certain point, I felt that they were going to be way better than me. Christian, I'm looking at my desk right now. Uh-oh, yeah. And it doesn't mean that you can't succeed, but I think in our core, that might be a little bit of a handicap, right? If you're unorganized, well, if you're unorganized, how can you be organized enough to place, manage, and execute trades? And then analyze all that information that's coming in from external sources, whether you're watching news or podcasts, whatever. It's going to be much more challenging. So for all of you, start thinking about that. Start thinking about your structure, your planning, and your focus on what you do. I'm pretty sure that when Tiger Woods has a bad day, it's not because of the wind. It's not because his pants are too tight. He's probably having a bad day golfing because something is in his head that's causing him not to focus on what he has to do. Other people, this is one people ask me all the time, why you teach. And this is one that I think is really kind of funny. There's an old adage out there that says, those that can do, those that can't do, teach. And those that can't teach, write a book. Well, I can, I do, I teach, and I'm writing a book. So I think that statement's a little bit wrong. But when you look at, the teaching side of it, why do you do this? Is a question I get all the time. Why do you teach for OTA? Why do people even teach there? They're just losers who don't trade. And by teaching, I'm conveying knowledge and skill sets that remind me and reiterate why I have to stick to my stop losses. When I'm over here spreading all this, information to you about negative stuff in my trading career, it reminds me of what has cost me all my losses. And if I can focus on those losses and make sure those don't happen again, then the future is going to be great for me because I will let those winners take care of themselves. Yep, Thomasina, I agree. It's not true. I do believe that in some cases it can be true, but it's a broad generalization. I think we have to avoid generalizations because while they might work for one or two individuals, they don't work for the whole. And that's one that's always driven me nuts. When I was teaching it, when I was giving a presentation for Larry's class at UCI, one of the guys was like, well, I have to say with a German accent. He's like, teachers, they're not successful. That's why you teach. It's like, no, I disagree. I love the teaching side of it. I love when the light bulbs come on and people send me messages down the road saying, thank you for helping me succeed at trading. Bottom line is I do my own thing from a trading perspective, and I like to teach on the side as well. So there you go. So those are my, I would say, those top 4 things. To Tim, who sent that one in, thank you very much for the question. That was a little brief piece on psychology, and I'm going to add one more here just to kind of tie it into Aaron's question, which is actually about psychology as well. He says, Thursday did a great show on pot stocks. I'm in ACB since 2021, $8. What would you do now if you were in my shoes? So going back to what I just said, Aaron, you already have a problem. Because you are in ACB, which is Aurora Cannabis, which has been a bloodbath, right? Since 2020. We'll look at the chart here in just a second. But if you're asking what you should do, that tells me that you don't have a plan, which was number 2 on my list, was have a trading plan and risk management. So out of our 4 things, you may have listened to others which got you into ACB. Mistake number 1. Number 2, you clearly don't have a stop loss because if you're holding since 2021, let me bring up a chart here for you. For everybody, ACB. I mean, you're trading at $1.36. So you said you're long at $8 from 2021. So let's zoom out a little bit here, and I'm going to put a horizontal line at $8, and you were in it since 2021. So 2021, it bounced back and forth. That's here for those of you that would like more visuals. Here's a rectangle to show you all of 2021. So this yellow rectangle I'm drawing right now is all of 2021. So that yellow box is the entire range for the year of 2021, right? And in there, the red horizontal line, that's where Aaron bought ACB. Now, I don't know why you bought it, Aaron, etc. But if you were listening to this show at any point, and I showed you this right here, and you told me you bought it at 8, I would be saying, where's your stop loss? Right? If you bought it at 8, I don't know when you bought it, but this thing has been on a pretty aggressive downtrend. It's drifting lower highs, lower lows. I mean, there's no way I would say to buy this one unless it starts making new highs, which may have happened right here, right? You see in November, we broke above, made a new high. Same thing back here, but for the most part, it's a big picture downtrend. So I would say you violated the trade plan because you bought it for whatever reason, don't have a stop loss in there clearly. And here, why didn't you get out when it broke, let's say this low over here, which is 375, and just kept on. I mean, this thing is just in a free fall. It's a horrific looking chart. Now, asking someone after this thing's gone from $8 to a low of under $1 tells me that you just really did not have a plan in place at all. So if I was in your shoes, first off, I would reprimand myself and I'd beat myself up a little bit. I'd be like, dude, what on the earth are you thinking? How the hell could you buy something at $8 and ride it all the way to sub $1 and now still be holding that thing? You have been locked in that trade for over a year and a half. And that, I don't know how many shares you bought, but all that money is not only lost at this point, but locked up in those shares still. There's so many other things you could have bought. So I don't want to make you feel bad about it, but if I was in your shoes right now, I mean, at this point, there's really no point in selling, right? It's at a $1.36. I would say just hold it, but I would never have let it get this low. You know, you guys can pick a point where you would have bought it, and I can make the assessment off of it. So let's say you bought right here. You bought as it came in this demand zone here. Great. I'd be out in the $7 range as it broke those lows. Oh, but it rallied back up. I don't care. I just can't take a big loss. At this point, you're committing one of the fundamental sins that ruins the vast majority of all the traders that have ever started this, and that's riding one stock all the way down to bankruptcy, way past the stop loss and just losing everything. So at this point, Aaron, I would do whatever I could to learn from this and tell myself, I will never, ever make a trade without a stop loss ever again. And I will stick to it. And this should be one that burns a hole in your brain. So every time you're like, oh, I don't want to put a stop loss, you need to go, remember that ACB trade? I'm not letting that happen to me again. Even if this was just on a few shares, doesn't matter. I mean, I don't know the exact percentage, but I can figure it out here. You literally rode this thing down to current price. You're talking roughly, come on, you're down roughly 83% on ACB. And you probably didn't have a plan. Now, I know I'm going to get the haters right now like, wait a minute, well, you're down on Bitcoin like 80%. I've told you guys time and time again, my plan for Bitcoin is not a swing trade. This is a 5 to 10 year play. So I really don't care what happens to Bitcoin between now and the next 5 years. Go down to 2 cents for all you want. I'll actually probably buy more if it gets 2 cents. But that I did have a plan in place. I have a written out plan for my crypto holdings. In this case with your ACB, you didn't have one. And, you know, do you dump it now? I don't think so. I think actually it's just about to potentially turn the corner. I think it's just about to turn the corner. Oh, maybe Aaron needs to lower his tax liabilities. I mean, you could, yeah, if you got some tax exposure, you could sell that this year, take a big capital loss on that position and, you know, take a write-off on it. Use that to offset some of gains if you have gains in something else. Sure, absolutely. And again, that's more of a question for a CPA, but for me, it shows that there is a lack of discipline and risk management on this one and not a plan. And that will kill you over time, Aaron. And I hate to see it happen, but learn from this one. And don't get me wrong. I know I sound condescending here. I have made all these mistakes. I've done it. I've done that. I mean, I rode Exodus Communications from $80 down to $0. So I'm not one to throw stones, but I also learned from that. I made that kind of the cornerstone of my trading as well. There's two things. Number one was my Exodus Communications trade, which I rode into bankruptcy. And number two was my Apple trade, which has been one of the main rules for me going forward. I'll just won't trade Apple ever again. So there we go. Okay, I think that was my stance on where did it go? I had it here. I'm waiting for a screen. There we go. My stance on how to combat your biggest challenges. What's the biggest challenge for new traders? I think that's it. And as Ryan says, everyone goes through it. Yep. The big difference here, Ryan, is some people go through it and say, I have to learn from that because I cannot let that happen to me again. Others go, oh, whatever, I'll just keep going. It's like being stuck in a briar patch and saying, you know what, I'm going to keep going straight ahead, even though the briar patch is just forever. I'm just going to shred myself. Don't do it. Okay, let me go back to the very beginning. There were some good questions that came through. Actually, I'll sprinkle in questions with the markets because obviously there's some good market stuff out there today. Joe says, Merlin, wouldn't the hammer formation from a day or so ago in the indexes be considered a bullish sign, yet 2 days later it wasn't really? So, yeah, I mean, again, everything works until it doesn't, right? So if we go SPY, and are you talking about this little guy here, or are you looking at the futures? So you had this hammer right here. If that's what you're referencing, it's not actually a hammer. If you're referencing one from Friday's session, that's not a hammer. And the reason for that is this is at the top of an uptrend. It technically is called a hanging man, which I don't believe is a really strong pattern. But no, this was not really a hammer because it should be at the bottom of a downtrend, right? Or at least a down move. And I think Gallo answered that one for you. Hammer formation at the top of an uptrend is meaningless to me. Hammer at the bottom. Yep, exactly, Gallo. You and me totally agree. So, Joe, this would not be technically a hammer formation. What site was it that we were on the other day that gave us all? Oh, it was Bar Chart. Bar Chart had a really cool feature. Now I just got to remember it. Tools. Screener, I think it was Screener. Oh, let me show you what I'm looking at. Right, I think that he had a whole bunch of candlestick formations here. I forgot where all that was. I got to play around on bar chart more, but yeah, there was one on here I thought that had candlestick formations, but I'm just going to have to move on because I could spend too much time there. But John Rowland was showing us that. I thought that was really, really cool. Yes, so hammer formation, got to be at the bottom of a downtrend, or at least a pullback even with the hammers, fine. A shooting star would be at the top of an uptrend. Let's see. When it comes to systematic trading, unfortunately, has to go through a bunch of talking heads until you learn a little bit. Yep. Yeah, and I think this is where you find people that fit your style or that you think are somewhat trustworthy. And there's a lot of people, like I say, a lot of people that are out there that are not. What else? Merlin, you're not a psychologist. You're pretty spot on with some of the stories. Cool. Oh, cool. Psychology. It's funny because actually one of the books I wanted to write was more about trading psychology, and I have no psychology degree, right? I'm definitely not a doctor in psychology. However, I think that you can all have a degree in psychology through experience and knowing how to fix problems. And I'm fortunate enough to have been in this industry for so long that I've watched hundreds and hundreds of traders on the floor. Plus, also, worked with thousands of students and see their mistakes. It's just behavioral analysis is all it really is. Let's see. I'm scrolling through here looking for your guys' questions. So if you got them, just type them in. I want to make sure I get to everybody's questions. When you retire from trading, would you ever do one last giant trade? No. Nope. No way. No. Not one last giant. And here's the thing. Peasant. Peasant sounds so feeble. I'll call it ambition. Here's the thing, ambition. With trading, it's not like, if you are on an assembly line, or you're an accountant, or you're just an engineer, at a certain point, you just don't do it anymore. You're kind of working for somebody else, you retire, you take your check. I look at what trading means to me, and it's like, I'm working for myself. I don't think I'll ever stop. Like I will probably be in hospice with a laptop making trades just because it keeps my brain going. I'm constantly looking at information. I'm constantly keeping up with headlines. I feel like there's a certain energy and enthusiasm that you get when you're trading. Keeps that blood flowing. Of course, Jim probably is going to do better than that, but I think I will trade all the way through to my last day. Hopefully they check my accounts because I might have some open positions when I finally pass away. I do have a degree in perspective, Christian. Absolutely. Let's see. Merlin, what are your thoughts on financials XLF for the next year? I started building a position at $31. Funny you should say that. So the options that I bought call options today. I normally don't do directional, but I bought financials today, and I loaded up quite a bit on financials. I bought 60 call options. I'm on the May, and I did the May 37s. So I'm out of the money, but I'm not worried about that. I think you're going to see, I'm looking at this trend right here, and it looks really good going back from mid-October. So I think the trend is there. GS said he's building position at 31. I think you're totally fine. I look at this big picture. A couple of things have happened, right? You would look at this and say that since January of 2022, it's been pretty negative, right? We're still making lower lows, but now we've just started to eke out some higher highs, just barely. So I don't think it means we're out of the wood yet. It's just slowly there. Today we had a really aggressive kind of panic sell-off right into the origin right here where you saw this, you had a gap up a few weeks ago. So I was buying right into that level right there and saying, okay, I'm fine with that. I bought enough time, so I went all the way out to May. I think that probably by late January, I will probably get out of those. My assumption would be for a pretty decent profit. I think we could be at the 37, 38 in a very short period of time based off of the holiday season. Now, we were already seeing great numbers come in for the holiday season. Record-breaking sales for Black Friday. Holiday season's a little better. Now, do the transportation issues face us? Is China going to start to hurt us? Yeah, that could potentially create a little bit of upset for the holiday season. But remember, financials also benefit from rising rate environments. And I look at this 10-year here. I'll bring up the 10-year bond for you, which is up about 3% today. That was nice. Here's your 10-year. So Here's the 10-year. Let me get these lines off there. Apologize. Sometimes my artwork gets a bit distracting. You could make the argument that we've shifted gears on the 10-year, right? So right here, I've got this nice red trend line. Let me add in a second one, which we could start maybe a little bit lower, and I'll squeeze it to where it fits the best. We've just shifted gears and accelerated, and I think we're having a pullback right now in that 10-year, but I don't think we're out of the woods yet. So even though the Fed looks like they might be backpedaling a little bit and potentially lowering rates, which I'll show you guys here in just a second, I think that if this does rally up and get back up to, let's say, 4%, which is not a long ways away, then you'll see the financials start to surge again. So I'm bullish on the financials. XLF. XLE was one that I did add some today as well. Predominant reason for XLE was I just think that if oil really starts to tank here, and that you're going to see supply cuts from OPEC, and that'll push things back up. OPEC doesn't want cheap oil. Doesn't matter what time of year it is, OPEC does not want cheap oil. So keep it at a high price. And if that means reducing production costs, sure, or reducing production, then they'll do that. So I think you'll probably see oil, and again, these are for May, so I bought kind of a little bit longer. Generally, I go out 90 days. It's just slightly longer than that, but those are the three that I'm in. Tom's, I'm planning on trading until I can't. Yep. I work on making it a mechanical and low stress possible. Yeah, I think the boring part, the actual trading is boring. What I find, at least for me, stimulating and exciting is the analysis part. I like looking at the price charts and saying, okay, well, what strategically is going to work best for my style and the trades I want to put on. So, yep. I know Tim Blotzer was. I don't know the very last, but he's having some pretty bad health issues near the end, but he was still trading. Glenn wants to look at AIG. Surely, AIG it is. Looking great. Gotta love insurance. From a technical perspective, it's looking stronger than the markets, right? We've been on this tear since 2020. The question is, when you look at this move that started in September of this year, where it was down around $47, now you're up, closing right now at 61. Is this due for a pullback? Now, there has been 3 days of declines in AIG, which looks like it came right back into the origin of this last move. So if you are thinking that this is a strong trend going to continue from here, then now's your buy point. It just feels like it might have gotten a little long in the tooth. I mean, that's a pretty big run up for AIG in a short period of time. You look at some of the other moves, even when it was tanking back in 2022 early, it didn't have that aggressive of a sell-off, and this big rally up here makes me a little bit suspect that maybe we'll see a bigger pullback, but all in all, hard not to be bullish on AIG when it's just making such aggressive moves to the upside. How does a $6 a barrel for oil impact the market? In a great way. If oil gets down to $60, it means that the cheaper oil gets, the more money the average American has to buy other stuff, right? We look at inflation costs. So obviously they're trying to push oil prices down here in the U.S. It's too expensive. It's inflation. Well, you're going to spend money somewhere. So if you got $100 and $80 of it goes to gas, well, you have $20 to spend elsewhere. But if oil prices, let's go from here to bring up the oil chart here, 1 second. If oil prices currently sitting at, call it 76, drop from 70, call it 75, they drop down to 60. Well, that's what, a 1/8? It's 20%. That'd be a 20% drop, and I can verify that just by going from 175 and going down here to 60. That should be about 25% slide. What that would mean that instead of now spending $80 for gas and having $20 to spend on other stuff, my gas bill wouldn't be $80 anymore. It would be $60. So now I can spend $40 on other stuff. So I've gone from 80-20 spending to 60-40, means $40 or $20 more to spend on other things. That stimulates the economy. So there you go. $60 barrel is for the Russian cap. Yeah, I don't know if that's all going to work out, but I don't know. I mean, that's part of the reason you're seeing this drift down. It's definitely a long shot. And the good news is I've got until May. Let's see. I did not look at economic calendars today. I just didn't have time, or the earning. There was nothing on the earnings front. You did have a rate announcement that's going to happen tonight. So in just a couple of hours here, for those of you who are trading the Australian dollar, you can see on the screen, you have cash rate coming out. Now they're expected to raise 25 basis points. Let's see. Let's check real quick and see what the U.S. is planning on doing, because those numbers may have changed over the weekend. I had not looked at those today, even though I was on a call talking about rates. it should be about 80%. Yeah, 79.4%, we're going to get a 50 basis point increase. So nothing there is really changing. I think that's probably going to stay the course and remain right where it's at. As far as economic announcements for tomorrow, here is the calendar. Earnings are pretty dead for tomorrow anyway, but here is what's going on for the U.S., and there is one announcement, and that's the trade balance, which is not that big of a deal. So the only other piece here is to keep your eye on the Australian dollar. They have GDP tomorrow. They have a rate statement tonight. And if you look at that Aussie dollar, go to AUD USD. Come on. There you go. You know, you've had a pretty nice bounce, but that it's getting it's slowing down in its trajectory, but still on a nice uptrend here. You could draw a line across the bottoms, looking somewhat bullish for the Australian dollar in the intermediate term, although long term still rather bearish. All right, that's going to do it for me. I didn't realize that this was going to be almost a full hour show today, so thank you guys that stayed the course and were here all the way through. Hopefully you learned something about psychology. I know that most of you are experienced and understand the impacts of psychology, but I would say, you know, the biggest challenge in trading for new traders is yourself. Convincing bad trades, convincing you to stay in things, not having a plan, being too stubborn to admit that you're wrong. The list goes on and on and on. So if you want to know more about psychology, maybe in the near future, I can get Dr. Woody Johnson on the program to dive deeper into it. But what would make that show work is if you guys sent in, here's my issues with trading, and then we can hopefully get those answered with Dr. Woody. Ganesh, good to see you. Welcome to the show. For those who are new, click that subscribe button. If you like today's show, hit the thumbs up button. If you have anything you want me to discuss on this program, go down below the YouTube videos. Any one of them is fine. And just type in your comments, your suggestions there. And by the way, you know, it's one thing to run a YouTube channel. I don't know if you guys understand how difficult and time consuming it is to keep all the spam and garbage out of chat. I spend probably 2 hours a week just going through the YouTube channel, removing all these porn ads and spam and people trying to call you on WhatsApp and imitating me. Anyway, we keep it nice and clean on that page for you. So send in your comments down below any YouTube video for anything you want to discuss on the show. And I will see you tomorrow with Justin Krebs talking about the long-term side of things, retirement, and really what should we be looking for going into the end of the year from a tax perspective. Thanks, everybody. Have a fantastic day. I'll see you tomorrow.